Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV 18 Motilal Oswal Budget Headquarters.
Well, beautiful looking studios, right, guys? And I think we should keep the set. We're coming to you from the CNBC TV 18 Motilal Oswal Budget Headquarters. Good morning. This is Bazaar Morning Call. I'm Prashant. With me, my colleague Surabhi and Nigel. And yesterday was a good day, and today can we have a repeat performance? Not for the same magnitude, but a smaller one. That's the question, guys. Hi, morning.
Morning. Hi. I'm going with cautious optimism this morning, though there's a lot of tariff talk, and forget tariff talk. Now, Mr. Donald Trump wants to take over Gaza. He wants to rebuild as the Riviera of the Middle East. What a beautiful thought to start the day. I have no idea how they're talking about doing it, and all the refugees and the inhabitants.
This is so far out from how would you think of something like this, right? I mean, I don't even know.
When I woke up and I saw these headlines, I thought I'm seeing something. I'm not fully awake. This can't be what he said. But appears that's the case.
What I thought you'll start off with, guess who's back? Back again.
FIRs.
Oh, yes, absolutely. That too, absolutely. That's very positive.
Yeah, that's interesting. And, kudos to Nimesh, because we asked many guests in the last few days, when are they coming back? And Nimesh yesterday at around 3 p.m. said, they're coming back today and bang on.
Well,
so, lunch on Nimesh.
Yeah. I think... Well, there's this, and hopefully maybe this is not just like a one-day wonder, and this is a bit of a turn, right, in that sense. So let's just quickly take it right from the top in terms of what happened last night and what's happened after U.S. close, etc., because a fair bit has. So U.S. markets recovered, equities recovered, and that's point number one. This is, basically trade worries easing off, some reversals on what Trump essentially said he will do, and then, of course, backpedaling, whatever you want to call it. S&P 3/4 higher, Nasdaq about 1 1/3% up as well. But, of course, remember that we, of course, played this trade wars easing yesterday. I mean, it's not new news. The market already kind of sort of priced that in yesterday's session with a near 400-point pop on the Nifty. The other thing, of course, is the fact that China is back from New Year holidays. I didn't see what the dollar CNY fix is. There was some expectation that actually it could even be stronger, because remember, tariffs on China have gone into effect. So that 10%, and China, of course, has retaliated with tariffs on specific things, not a sweeping one, which still leaves a room for interpreting this to say that, well, maybe they want to de-escalate and not escalate. And that's the reason why markets are also not too worried at this point in time. Google, that reported numbers after U.S. close. The stock, the last I checked, is down 7-8% post-close. The cloud revenue is below expectations, but I must say that the capex, the number that they've indicated is very strong. I think it's about $60-70 billion, but it's a large number which they've indicated. Two data points out of the U.S., both missing expectations. You had the U.S. factory orders and the JOLTS data, which is essentially people looking for jobs, and as opposed to the job openings out there, both came in below expectations. I think that more than anything else was the reason why there was continued pressure on the dollar. There was, of course, the initial leg on the dollar on the downside on what happened with tariffs. But, of course, there was this data. Dollar index this morning, I checked it yesterday around U.S. close. It was about 108 point something. We are under 108 now. So, in the last 24 hours, there's a full 1% pullback that we've seen on the dollar index, and that's very positive for emerging market flows, etc. 10-year yield has fallen to about 4.5%. That's about a 5-odd basis point pullback therein as well. So just to sort of circle in the levels here, yesterday we had a fantastic close, 1.6 higher on the Nifty. The broader market indices lagged a little bit. I mean, not too much. Mid-cap index was 1.5 higher. The small cap was 1%. But it was Nifty and, of course, the Nifty Bank, which was up 1.5%. So we've closed on the Nifty well above the 40-day exponential and the previous high as well. Immediate resistance will be the upper end of the falling channel from the highs, which is 23,790. This morning, with the GIFT Nifty indicating a 50-point pop, we'll be there. So we'll have to see. We'll have to take it step by step. But I'm not going full out. I mean, eventually we're headed to 24,000 if the momentum stays, but this is the next first immediate resistance, 23,790. And of course, on the downside, the low of 23,222 will be something which the market should support and should respect. Bank Nifty is also closed well above the 40-day exponential moving average. Actually, for the Nifty Bank, the 40-day exponential and the upper end of the Bollinger Band coincided. We've closed well above those levels. Immediate resistance is 50% retracement of the entire fall, which is 50,983. We left off at 50,160. And of course, on the downside, low of 48,906 is important. And it's important that the market respects that. GIFT Nifty will give you a sense of how we're likely to start. And that's about, 56 odd points higher. Surbi.
Yeah, absolutely. I mean, the overwhelming sort of sense seems to be positive considering the strong cues that we have here at home. The global markets are still sort of a little all over the place. Talking about Wall Street futures themselves, because of this Alphabet miss, it's not just the Alphabet stock, which is down about 8% in trade. Nasdaq futures are down about 0.5% as well, and the other futures there between 0.2%, 0.3%. So let's see. Wall Street is a bit tentative on that miss that happened. But let's talk about Asia, because China is back from the holiday. The first few rates that trickled in were slightly negative. I'm talking about the mainland Chinese markets as well. The Hong Kong Hang Seng is also a little more cautious this morning. And the mainland Chinese market is nursing a cut-off, but not too much, 0.3, 0.4% sort of a cut. It's all about tariffs. And just again, to jog your memory, what is the retaliation from China in the last 24 hours? They're imposing 15% additional tariffs on all U.S. imports of coal, LNG. There's 10% additional tariff on crude oil, on farm equipment, on certain auto parts and certain cars as well, cars and trucks. So that's the ambit of the retaliation that we've seen from China so far. And because of this, there has been a bit of a pickup in the yuan. When I saw the rate, let's get the one on our screen if we can, because it seems it's hovering just around that 1.3% handle, 1.288 right now. So it's getting better. I mean, the level was 1.3534, if you remember, when the first round of tariff movements happened from the US side. But with China hitting back, there's some strength that's come back to the yuan as well. So that's the latest on the tariff piece and the China reaction. There's data out of South Korea as well. The consumer inflation numbers continue to inch higher, 2.2%. They've beaten the estimates as well. So that's another sort of point to think about. On the oil market, oil has been very range-bound, and there's a lot of volatility going on in the oil market. The headlines are now coming in from Iran. Reuters has been reporting that Mr. Trump wants to ensure that Iran cuts its oil imports down to zero. And apparently he'll, restore this so-called maximum pressure policy or campaign against Iran. Let's see. It's leading to, like I said, a bit of a down move on Brent oil. Not that we're complaining here in India. It's good news. Brent continues to be under some pressure as well. But the best news, like Nigel said, is they're back. They're back again. FPIs, and after a whole 23 days of non-stop selling, we finally got a positive number coming in. It's not a very big positive number, but we'll take it. 809 crores of buying from FIIs. Domestic institutions, for a change, were on the sell side yesterday. Sold off stocks worth about 430 crores at a net level. So let's see. I think this is going to be the most critical question for the market. Is this a flash in the pan, or does this indicate a change in psyche? Because there's a lot of volatility. All this tariff stuff's going on between China, US, Mexico, Canada. So will FPIs now start to come back, seeing India as a bit of a relative safe haven, where the budget is also out of the way? Biggest question for the market. Very quickly, finally, results in focus. Titan, first glance, seems like a miss, but then I think the internals are showing that there is an exceptional item, some inventory issue out there, but the margins are under pressure, sales are under pressure, so it's not that great. Lemon Tree is firing on all cylinders, as you'd imagine. Strong EBITDA, strong margin, so that should be a good one. Happiest Minds is somewhere muddling along in between. Dollar revenue growth is about 0.5%. We'll see if the market's happy enough with that. I picked up Triveni Engineering, That doesn't seem like a very good number. There's a lot of pressure coming in. Margins moved to almost 5% from 12.5%. Revenue is okay, but there's been pressure on the operational front. So we'll watch out. Lots of such numbers to go over. We'll talk about that. But Nigel, I think you picked the right song this morning. They're back. Back again, the FPIs.
Well, that's right. And we keep talking about the FIs, and they're back, and that's good for our markets. But kudos to all of you, because you all have kept the faith. The SIP flows have been solid. The mutual fund flows as well have been solid. But on the FI number, as should be mentioned, need to check if it's just a flash in the pan. Is it just a Valentine's Day wish? Is it a February, just they oversold themselves, so that's why they put in some money? You'd like to see that trend continue for the next few trading sessions. So that's going to be rather important. But what went on yesterday, the kind of finish we had had made you feel very, very good about this markets. And it was evident that we did have some shorts getting covered out because both the Nifty and the Nifty Bank moved up and the open interest was low. And that perfectly tallies in with the number we got in from the FIs. They added long positions, more than 15,000 contracts is what they added in yesterday's trading session. And they unwound or they covered close to around 16,000 contracts. So that's a swing factor of close to around 30,000 contracts or thereabouts. And in percentage terms, in a single trading session, from around 90%, it came down to around 83%. We've been making this point that the FI short positions in percentage terms, and we're looking at percentage terms because the contract side itself changed. It was, the highest that we saw in the last 2 years. That's all the way since March 2023. And they covered some shorts in yesterday's trade. And that's precisely the number that comes up for you on the screen. So the short positions from the FIs were down by close to 10,000 contracts. The clients, they have been backing up this market and they unwound close to around 10,000 contracts on the long side. Moving to the options data then, and that's telling you the picture out there. The FIs were net short. The call writers are having a gala time. Yesterday, they got stumped out, because if you look at the 23,500 call, big unwinding out there. They were packing their bags. They were saying, let's get out of this. All those writers out there. And now the next level you're looking at is on the upper side. So around 23,850 or thereabouts, that could be the first reference point. And what gave you confidence yesterday was there was put writing that we saw. We started the week at around 23,200. It moved to around 23,500 in terms of put writing in yesterday's trading session. And because of that action that we saw on the option side, well, we had the PCR that moved up to around 1.16 or thereabouts. Now, the levels you need to track. The Nifty ended very, very close to the 50 DMA, which is around 50, 60 points away from current levels. So you'll want to get past the 23,850 odd mark. And then the crucial reference point is the 200 DMA. That's from where we did start getting nervous. So you'll want to conquer that mark. On the downside, the reference point that comes up for you is the 20 DMA. And remember, now the base of the market seems to have moved up just in the near term. The Nifty Bank, it's got its work cut out. That's been the underperformer. In the last few trading sessions, it's outperformed. And now you have the RBI policy imbalance as well. So the 50,800 odd mark is going to be important. So it's a feel-good factor. If the Nifty can hold on to these gains, I'll tell you what, the broader markets that took a harder knock, well, we could see a bit of an outperformance coming back there because that's the space that's got hit hard. Selectively, stocks will do very, very well. A couple of good results is what we had as well. So keep an eye out on the screen on that front.
Okay, all right. So let's watch out and see if this up move that began yesterday, actually last couple of days, whether that can continue or not. Moving to then the equity call of the morning, Lawrence Belanco of CLSA says the Nifty's decline of over 13% of September 2024 highs saw initial support formed between 21,700 to about 21,800 to 22,700 to 22,730 early last week. He says coupled with the price momentum divergence, this suggests that the decline of the September 2024 high is mature and vulnerable to a reversal. He adds that Bajaj Finance and Dixon Tech are presented as buy candidates.
All right. Well, that's basically what's happening with some views coming in. And we'll